Bitcoin just made a huge move. So the question is, if you had money ready today, would you buy Bitcoin now, wait for a pullback, or stay out completely? Bitcoin surged above $77,000 after a sharp rally. U.S. spot Bitcoin ETFs saw strong inflows, and more than $4 billion in bearish crypto positions were liquidated as short sellers were forced out. But those are three different forces. One shows institutional demand that can support a longer rally. One reflects the bigger macro story. And one was forced buying, which can eventually run out. So before you risk your money, check these 5 signals. More green signals mean more confidence. More weak signals mean more caution. And one signal can override everything else.
Is real money still entering Bitcoin? The recent ETF inflows were the starting signal, but the signal that matters now is whether that demand continues after the excitement fades. What you want to see is continued net inflows over several days. That means new money is still entering Bitcoin. What you don't want to see is Bitcoin staying high while ETF flows suddenly weaken or turn negative. That can mean the buyers supporting the move are stepping back. Continued inflows? Green. Weak or negative flows? Caution. You can track this daily for free on Farsight Investors or Soso Value. Is Bitcoin actually holding the breakout? A rally is not confirmed just because the price moves up fast. The real test comes after the move. Watch what happens when Bitcoin pulls back. A healthy structure looks like this. Bitcoin breaks above an important level. It pulls back, and buyers defend that level. The old resistance starts becoming new support. That is what you want to see. But if Bitcoin pushes higher, gets rejected, and falls back into its old range, the breakout may be failing. Holding the new range, green. Falling back into the old range, caution.
Is the bigger macro story still supporting Bitcoin? Bitcoin and gold rallied together after the U.S. Treasury expanded its long-term bond buybacks. The dollar weakened while investors moved back toward assets such as gold and Bitcoin amid concerns about debt, inflation, and the value of the dollar. You don't need to understand every detail of the bond market. Just watch the relationship. If the dollar remains weak while gold stays strong, the broader hard asset trade may still be supporting Bitcoin. But if the dollar strengthens sharply and gold loses momentum, that support can weaken. Weak dollar plus strong gold, green. Strong dollar plus weak gold, caution.
Is the rally healthy, or is too much borrowed money piling in? This is the signal I would watch most closely. After a big rally, traders often borrow money to open larger positions. That can push the price higher, but it also creates risk. If too many traders are positioned the same way, even a small drop can force them to sell, and that selling can turn into a much larger fall. Watch 3 things: funding rates, open interest, and whether leverage is rising faster than real demand. Controlled leverage, green. Rapidly rising leverage, caution. Extreme leverage, stop chasing. And remember, this is the veto signal. If leverage becomes overheated, it can override the other 4 signals. So if you have 4 green signals, but leverage is the weak one, treat the market like a 3 out of 5 until leverage cools down.
When the forced buying slows down, does fresh demand replace it? This is one of the most important questions after a short squeeze. The rally can continue if new buyers keep entering after the forced buying fades. A positive sign is simple. Bitcoin holds its gains. ETF demand continues, and new spot buyers keep entering. A warning sign is also simple. The rally slows down, profit-taking increases, and there aren't enough new buyers to support the price. One advanced metric you can watch is Bitcoin's spot apparent demand. It has been improving toward positive territory, which may suggest real demand is recovering. But keep this simple. You don't need to trade based on one metric. You want to know whether real buyers are replacing the temporary buying that pushed the first part of the rally higher. Fresh demand continues. Green. Buyers disappear after the squeeze. Caution. Now put the 5 signals together. 5 green, the rally has broad confirmation. Traders can look for confirmed setups. Investors can consider gradual exposure. 4 green and 1 weak, the trend may still be strong, but identify the weak link. Is it improving or getting worse? If the weak signal is leverage, treat the market like a 3 out of 5. 3 green, the evidence is mixed. Traders reduce size or weight. Investors don't rush. 2 or fewer green. Too many parts of the rally are failing. No trade is a trade. Pause new buying and wait for the picture to improve. Now let's apply that to Bitcoin right now.
ETF Flows green. Institutional demand returned strongly, but continuation is now the key. U.S. spot Bitcoin ETFs recorded about $1.61 billion of net inflows over 4 trading sessions, including roughly $606 million on the final day. Price structure, yellow. Bitcoin made a powerful move, but the market still needs to prove it can hold the higher range. Gold and the dollar, green. The broader hard asset trade remains active, with the Treasury's expanded bond buyback action helping weaken the dollar and support demand for assets, including Bitcoin. Leverage, caution, this is the signal that can override everything else. Fresh demand, yellow. The next test is whether real buyers continue supporting Bitcoin after the initial short covering pressure fades. So right now, the market looks roughly like a 3 out of 5. That is not a clear all-in buy signal, but it is not a reason to ignore Bitcoin either. It is a watch-and-wait market. The next move depends on whether the green signals get stronger or the weak signals start getting worse.
The same 5 signals apply to everyone, but the decision is different. If you're a trader, ask one question. Am I entering because the setup is confirmed, or am I chasing because the candle is green? If the signals improve, look for confirmation. If the evidence is mixed, reduce risk or wait. If leverage becomes overheated, staying out can be the best trade. If you're an investor, ask a different question. Is my reason for owning Bitcoin getting stronger or weaker? If the thesis is getting stronger, gradual exposure may make sense. If the signals weaken, pause. You don't have to catch every move. You only need to put capital at risk when the evidence supports your decision.
These 5 signals can change every day. ETF flows update, price structure changes, the dollar moves, leverage builds quietly, and fresh demand can either strengthen or disappear. I track all 5 of these signals daily and share the changes that matter in my free Telegram channel. The link is in the description. If this playbook gave you a framework you can actually use, like, share, and subscribe. More market playbooks like this are coming. So before you buy Bitcoin, don't just ask, is the price going up? Ask, is real money entering? Is Bitcoin holding the breakout? Is the macro story still supportive? Is leverage under control? And are real buyers still there? More green signals mean more confidence. More weak signals mean more patience. And if leverage gets overheated, it can override everything else. Don't buy just because the price is moving. Don't sell just because the price dips. And don't wait until the answer feels obvious. Check the 5 signals, read the evidence, then make your decision.